Hi everyone, it's Chris Hynes from Wealthi. Hope you're all well. Today I just thought it'd be worthwhile running through a quick little video and tutorial, you could put it, about how to pick areas in the UK to invest in. And it goes back to the root and following up on my message and the video that I put out last week around how to purchase a buy-to-let off-plan investment. And the first point around that process being the research component. And this is where that ties in to that research component, and understanding your demographic is how I worded it in the last video, but really understanding what you're looking to achieve from your investment property, really stripping it back and getting to the root of really what you're looking to achieve from this property investment. Now, there's lots of different scenarios, and this will depend on the individual. It depend on your personal circumstances, but we have to think about things like, are you looking for your higher cash flowing opportunities, or are you looking for your long-term sustainable growth opportunities and long-term sustainable wealth in property? Then we also need to consider how much money you have in the bank, and that's a big factor when looking at these investment properties, and having that 25% give or take put aside as your deposit for a buy-to-let investment. And then what sort of capital growth rate are you looking to achieve as well? What have you got in mind, and what are you looking to achieve from a capital growth perspective? And we can provide some guidance around some numbers from a capital growth perspective and give you an idea of some achievable targets for some of these areas that we are working on projects in at the moment. So they're the first 4 points to consider. And then we have to think about going back to your individual circumstance. But if you are financially free, if you have that financial freedom, and you could say if you're cash rich, then maybe you're looking for something that's going to benefit with some stronger growth over the long term. Whereas if you're in a position where you're looking to create a bit of an extra flow of cash, a bit more of a second income, you could say, then we're going to be looking for areas that are going to be achieving greater rental yields. And if we're looking at greater rental yields, that automatically removes London out of the equation. So it's really a process of elimination when we are picking these areas, and understanding the areas and what you're looking to achieve with your investment property. It goes back to understanding your outcome. Now, there's a couple things as well that you've got to be wary of when it does come to picking your investment areas. And there's two main points that I thought were worthwhile noting when you're looking at things to avoid in your investment. Now, the first one that I believe you should stay away from, and areas that you should stay away from, are areas that have historically low capital growth, or historically no capital growth. In fact, there's areas in the north of England and the northeast of England, between your Leeds and Newcastle, where you can go and purchase a property for £35,000 to £40,000. That's great, and it's sat at £35,000 to £40,000 for the last 10, 20 years, and there's really been no price growth. And really looking forward in the future, it's likely to stay at that £35,000 to £40,000 for the next 10, 15, 20 years as well. Now, the other thing to consider when you're looking at these cheaper options, the £35,000 to £40,000 investment options, it might sound like a great idea on paper, and from a numbers perspective, you're thinking, awesome, I don't have to chuck in much cash. But that's where you're wrong. And the banks aren't going to be willing to provide a mortgage for anything under about a £50,000 loan to value mortgage. So you'd have to pay that £35,000 to £40,000 in cash upfront. So that's one thing to consider. If we were to use, and thanks to leveraging and the buy-to-let mortgage world, but thanks to leveraging, if we were to use that £35,000 to £40,000 as our deposit on a buy-to-let investment property, that gives us the possibility or the capability to purchase an investment property that's more so around that £125,000, £130,000 mark, and that's going to appeal to a larger pool of tenants. So it's going to really open up that tenant opportunity for you to have some more sustainable and long-term tenants as well, but also a higher caliber of tenants. So that's one thing to consider. The second point that's worth noting is to stay away from areas that have high numbers of LHA tenants. Now, I'm not saying LHA tenants are bad. I think they're also a great tenant to have for your investment. You're going to have a government-backed tenant in a sense. paying your rent, which is going to be supporting your mortgage. And you know that the government's always going to deliver on when they have promised to pay your rent by. So that's a bonus. But we don't want to be considering areas that have a large concentration of these LHA tenants. And I'm not saying they're a bad tenant, but I think when you've got a large concentration of them, it really doesn't make the area and the tenant profile as desirable as you want it to be from an investor perspective as well. So they're the two things to really steer clear of. You want to avoid your areas that have historically seen next to no capital growth, and you want to avoid areas where there's large concentration in LHA tenants. With off-plan purchases, you're less likely to encounter areas where there's been concentration in LHA tenants, and that's due to infrastructure that's being put into the area. And the projects we're working on too are in more central locations. There's infrastructure projects happening in the area. There's corporate blue chip companies that are moving to these areas as well. So we're avoiding that tenant profile. But for someone looking to get started, and they might see a fantastic opportunity online on Rightmove for £40,000, let's say, and they think fantastic, that works well with the amount of money I have saved up. But you've just got to be wary of the fact that you're not going to be able to get a mortgage on that property. It will have to be paid up front, and then just have a look at the LHA numbers and double check that. And as you can see here, you can go straight onto the LHA website and you can check some of these areas out as well. Now, moving on to the fun stuff, the things that we want to know about and the things that are going to dictate how to buy our property. And it goes back to the bare bones again, understanding that outcome. And as I mentioned in the video middle of last week, we want to understand our tenant profile. We want to understand the sort of tenants that are going to be moving into our investment property. What sort of companies and businesses are in that area? What does their employer look like for these corporate businesses as well? And then we want to understand the infrastructure projects. We want to see how much investment is going into infrastructure in the area, and we want to monitor those population growth numbers as well. And all in all, this is, altogether, it's going to dictate those supply and demand numbers. Now, when it comes to gathering our demographic information, there's a number of sites that we can use, and there's a lot out there at the moment that are available to use. Now, a lot of them do require a subscription, but it's not an expensive subscription. I believe with Realise, which I'll run through in a second, it's about £15 a month to get a subscription with them. But we can do all this information. We can do all this information gathering for you, and we'll sit through meetings and share our screens and run through the data that we've seen for these areas as well, just to give you the peace of mind that we've run through absolutely everything and understood who our tenant profile and what our demographic is for the area. But a great site that I've been using recently is a site called Realise. Now, these guys are a relatively new business in the UK, and they provide some great information about the real estate market in the UK. There's heaps of these sites that you can use. Another one is Property Data UK. There's another one called Street Check, and they're all very, very similar to each other. And essentially they are providing the same information. So this one is Realise. And as you can see on the left here, we have a short summary of the Birmingham property market trends. Then you've got some residential sale trends. So it's explaining or showing how much prices have grown for the median house price, total sales in the area, average price per square foot. And as you can see here, they've broken down the different asset classes within the residential real estate world to give you an understanding of the price points in the different areas of the retail world, be a detached home, be a terrace house, be a flat, whatever it may be. You've got all the information here. Now, you've got your residential rental trends, and I'll touch on this again in a second, but understanding your rental market is a very important part of the process. And you probably heard me go on about understanding your tenant profile, understanding your tenant demographic, but it is a very important part of the process. So understanding that the rental trends for the area. I have used Birmingham in this example, but understanding the trends in the area is a very, very important part of the process. Now, I'm sure there's also some points here around population and age. We also want to understand the employment for the area. So you can see here there's a short breakdown on what the average income is in Birmingham, and you've got the total number of employed workers at the moment, and breakdowns about how much that represents for the area as well. So that's a great way of doing it. Now, the next thing we want to do is jump onto Rightmove and have a look at the rental market demand. So in this case, I'm using Birmingham as an example. And as we can see here, there's 362 results available at the moment. So what we want to do is click on filters in the top right corner. And we want to remove house shares, retirement homes, student accommodation. You can see that's already reduced it by about 100. We don't want houses of multiple occupants to come up in our search when we're doing this. You're going to have uni students that are going to be living in these share houses, and it's just a completely different market to what we're looking to achieve with our buy-to-let investment. Then we want to see how many lets have been agreed at this stage. So if we click on the include let agreed, you can see that that's gone up to 580 results. So if there's 263, I believe it was, current 264, sorry. So there's 264 properties available, and then in total 580, including the let agreed. So you've got about, give or take, 300 agreed lets in the area. That's showing us that there's a great demand for Birmingham city centre in this case. People want to live in Birmingham city centre, and it's shown by these numbers that we can generate, or that we can pull up on Rightmove, and it just gives you a quick, easy breakdown of not really a breakdown, but more of an understanding of the rental demand and if there is a rental demand for the area. And when you've got about 50% of the available lets already leased, then it's showing us that there is a strong demand for the rental market in that area. Now, another thing we want to do is understand investment projects that are happening in the area that we're considering. And a great way of doing this is simply searching the city that you want to invest in and development plan. I was previously looking at the Birmingham development plan, but let's say I changed it to the Manchester development plan. There'll be a local plan that comes up here. And as you can see here, you've got your core strategy. And we want to view our core strategy. We'll download this document. And this document is going to tell us how much money they've planned to invest into Manchester each year, what sort of projects are coming to the city, who is going to be moving to the city, what they're trying to encourage in the city, what they're trying to rejuvenate, and a number of different factors as well, the Manchester Now. And it really gives you a good breakdown of the area and what their bigger picture is as well. So that's a great tool, a great way of finding out what infrastructure projects are happening in the area. Of course, you can do a simple search and write in, let's just say, Birmingham investment opportunities. And once you've written in Birmingham investment opportunities, you're going to get a stack of articles come up telling you about different infrastructure projects that are happening in the area as well. So a few ways of finding out that sort of information. Now, the next thing we want to do is understand what sort of businesses are in the area. Now, Birmingham's a great example because in Birmingham now, we've got some very, very large corporates that have relocated headquarters up to Birmingham. We've seen KPMG, we've seen PwC, Goldman Sachs, Deutsche Bank, another one. So HSBC as well. So we're seeing some large businesses move up to the area. Now, you're probably thinking, no, that's not going to do anything for my property. What effect's that going to have on my investment property? But what that's going to do is bring more investment to the city itself. If you've got Deutsche Bank moving their headquarters to Birmingham, which let's say I think there's about 4,500 employees within that office, there's 4,500 employees that are relocating to Birmingham that are going to be putting money into the local economy. And they're also going to help drive prices up for these properties as well. It's going to create greater demand for these new build opportunities where you've got blue chip workers that are earning a decent penny and they're looking for the best opportunity for what they have to spend as well. So it's going to help drive up that competitiveness and intel that's going to drive up rental prices as well for the area. And over the long run, as we continue to see more and more of these blue chip corporate businesses relocate up to Birmingham or Manchester or Liverpool or wherever it may be, it's going to help drive prices up over the long term as well. So there are a couple things to consider. So just to recap on what I've discussed. So the first point, we're focusing on our outcome. We want to understand what our outcome is. Do we want higher rental yields? Do we want greater capital appreciation? How much money do we actually have to spend? And what sort of capital growth rates are we looking to achieve in our property? Now, once we've established that, we then need to establish where not to invest. So as I mentioned, we're looking to stay away from areas that have historically shown no or next to no price growth over the long term. And we also want to stay away from areas that have a concentration of LHA tenants as well. Then we want to have a look at our rental demand. We want to understand what sort of tenants are in the area. Are they blue chip workers? Are they skilled workers? Are they managers, supervisors? Whatever it may be, we want to understand who our tenant market is. Then we want to look deeper into investment in infrastructure that's coming into the city as well. So that's when we're looking for major projects such as your rail projects, your motorway projects, your city master plans, things that are going to revitalize your city and also provide connectivity to the rest of England. And I think as we continue to see these cities evolve, we're seeing that rippling effect out of Birmingham. So I think Manchester is a great example of the rippling effect at the moment, actually. And if we take a look at Manchester, so Manchester city centre is here in this middle section here, surrounded by this ring road. Now, we've seen Manchester expand over the last really 10, 15 years, and it's starting to grow out of where it once was. We now have Media City, for example, which isn't in the city centre, but that's creating a hub outside of the city centre, which is employing thousands of people. And you've seen major blue chip corporations move into Media City UK. You've got the likes of ITV, BBC, just to name a few. Ericsson are there as well. So you're seeing the large corporates move outside of the city centre. And as you can see from Manchester as well, you've got ring roads out of the city in almost every direction, so providing great connectivity to the rest of the UK. Manchester has the train line in place already that connects you to London in about 2.5 hours. And you've also got great connectivity around the city. Now, an opportunity that I mentioned last Friday was an opportunity in Old Trafford, and in 12 minutes, you're in the city centre on the tram line. So it goes back to how we're watching these cities evolve due to the infrastructure that is being put into these cities. And then the last thing, and the fifth point that we're looking at upon the recap of this video, is who is there. What corporates have moved to the area that I'm looking at? What large international businesses or national businesses have relocated their headquarters to the city that I want to invest in? And what's that really going to do for the area? If there's 3,000 new employees that are moving to, let's say, Manchester, then it's going to create some rental demand or higher rental demand in some of these areas that we are working on investments at the moment. And of course, that's also going to keep driving up price growth in the area as well. So I hope that's been a nice little short breakdown of how to pick an investment area in the UK. More than happy to have a chat with each and every one of you and run through some of these numbers on Realize or OMI, Office of National Statistics, or even look through Street Check and Property Data UK, whatever it may be. But we can really pull apart the numbers and understand who is going to be moving into our investment property, and we're going to identify what outcome we're looking to achieve from our property. But thank you once again, everyone. I hope you've enjoyed it and got some knowledge out of this video, and I look forward to speaking to you all very soon. Have a fantastic day.